Now, one of the things that we saw from now Vortexa, if we use their data a lot. We think it's great, and they do a weekly YouTube video, something that you can subscribe to. I highly recommend it. I think they're very good in trying to highlight it. And these are two different charts that I thought were really important and reinforce really what we've been talking about when we look at what's happening in the U.S. So here you can see that the U.S. has been a big exporter of product, some things that we've talked about, we're going to continue to talk about. So the exports of clean products continue to be elevated. That's going to continue when you look at historics, come back a little bit, but again, elevated versus historics as PADD 1 gasoline continues to be a bit light. And now that we do expect gasoline imports to pick up, especially given where storage is within Europe. So that's something that's going to continue, that you'll start to see this drift back up. And there's also a certain amount of seasonality into it, where we typically increase our imports, given that there's more demand as we go into the key driving season. Now, Russian crude and exports are recovering, and I think this is an important piece because there's a lot of demand, and the demand in the market remains for Russian crude. It's just a different type of demand. It's coming because you have highly discounted barrels that are going to, again, flow into Asia, and you need it discounted enough so that it can cover, obviously, the insurance as well as some of the other important pieces. But Russia also has to sell these barrels. They have no choice but to push them into the market. And it really comes down to at any price, any clearing price they can get, they're going to try to get. They've already cut some of the taxes, and in terms of other types of VAT taxes and other types of taxes that Russian entities have to pay, just to make sure that they're incentivized to continue to move it through. And we see that continuing as you look at the different flows. Now, crude still remains elevated. The bigger issue is when you look at the dirty and clean products, you can see that they've come down just a bit. But again, we expect that to remain elevated as they have no choice. So they will continue to discount them and push them onto the water. Global crude oil on the water is at obviously it's below where we were in 2020, but when you take away 2020, it's at a record high. And it's actually at the high for 2022. We see that being the case. Again, I can't stress this enough. Russia is going to increase as much as humanly possible on the water, especially when you look at Europe, and Europe continues to take down a bit less on pipe. Again, anything that doesn't go on pipe they're going to try to push onto the water. That's going to keep some of those flows coming through. So then oil in transit, when you look obviously below where we were in 2020, but when you look through the remainder of the other 4 years, you can see that we're at a new high and coming to a 2022 high. And that's where we continue to see that going. When you look at China is at a 2-month high. And when you look at crude oil in transit, you're seeing, again, a lot of slow steaming, just because especially when you look at China and the amount of backlogs at the ports, there's no rush to get it there, but the discounts are there. They're going to try to lock them in, but they're going to have them take the long way, and they're going to have them go as slow as physically possible in order to delay some of those movements. So as those cargoes continue to get added, that's going to keep that crude oil in transit elevated. But it will also drop down some of that floating storage, because it's transitioning from floating storage into transit, and then it'll convert from transit back to floating storage. And that's why when we look at what's happening, there's more cargoes continuously getting put into floating storage, which is why Nigeria is taking down some of their exports of some of these different grades. Angola is fairly flat because West Africa is still at a record level. So again, they're trying to kind of balance that. And now the Middle East is starting to see some of those increases. So when you look at what is happening on the floating storage front, we expect it to be just below 2021 levels. And then as crude in transit drops, we expect that to, again, come into the floating storage and keep this elevated in general. Then when you look at what is happening in the U.S., again, crude and product exports, gasoline increased 32,000 barrels. That's 256,000 above the 5-year average. Distillate, as we were saying before, was going to drop, but still remain above the 5-year, just given where prices are. So it did drop 261,000 barrels a day, still above the 5-year average. Propane, propylene dropped 365,000 barrels, still above the 5-year, but just slightly, just 19,000. So again, still holding firm. It's obviously the crude oil, the crude export with an increase of 2.09 million. That brings us from 2.18 up to 4.27. So again, that's where you got that big shift, and that's something that we were talking about where, again, bringing us back in line to those exports of averaging about 3.3 million barrels a day. So now when we look at finished motor gasoline, you can see that we're still at those high levels. Now that we've started to see some of those increase, we expected to remain elevated, but drop down a bit and come in closer to the top end of the cloud. But still, when you look at it seasonally adjusted, still at an elevated level. Disti, as we were saying, we expected it to come back towards the 5-year average. And it's not so much, it's just because the comps got easier. So you can see that there's typically a spike. The spike came a bit easier, but we do expect it to remain in the top end of the cloud or right around that 5-year average. Now, when you look at ethane exports, the data is a bit delayed, but from what we have so far, it increased again. It just still remaining in a very strong spot. This is showing you what crude oil has done, so you can see that the exports have remained elevated. But more importantly, it's again that this consolidation. All right, you can see the 4-week rolling average, 3.283 million, and as we were saying, just right around that 3.3 million barrel a day mark. That's where we expect it to stay, at least above that 3.2. If you want to say between 3.2, 3.3, again, that's where we see that 4-week rolling average really holding firm given some of the pricing. Propane, propylene dropped back just above the 5-year average. We expect it to remain elevated, again, just staying strong as the demand into the international markets remains. Now, when you look at the Brent Dubai spread, it's come down, but now it's kind of holding in at about between $6.25, $6.50. You're still seeing it kind of hold in. You had some European softness. Some prices were taken down. But when you look at Saudi Arabia, Saudi Arabia on the OSP side, they don't give discounts against OSP, but they give incentives. And it could be a discount on shipping. It could be once it shows up at the coast, they'll give 5-7 days of free storage, which again is just covering the day rate. So there's some of that can come in that can bring some of the pricing down, because when you look at OSPs, it's over $9 above Brent Dubai. So when you look at the spreads, again, it's going to keep things a bit tight, which is what we're going to talk about at the end of this segment. But you're seeing that we're holding in right around that 6 to 650 level. Singapore margins moving higher, obviously, with where distillate is. When you look at just the cost of operation, again, natural gas goes into keeping these things alight, again, keeping that moving through. So LNG prices, especially when you look at Henry Hub, which is right around $7, again, you're seeing just how expensive natural gas is, which also comes into you're going to need higher cracks, higher margins to cover where your costs are. So again, those are things that are going to continue to come through. And then on the hydrocracking side, again, seasonally adjusted, and even against 2022, right around the highs, just as the distillate cut continues to be in favor, continues to be short, and the strong move. Now, when you look at Russia, I just want to highlight that Russia for April has increased by another 300,000 barrels a day. Again, desperate to flow. You're going to continue to see that move through, but they do have a limit. The limit, and again, this is rough calculations, is about 4.7 million barrels a day of exports by boat. There's slip issues, there's storage, there's pipe. So again, there's only so much that can be done, but they're going to try to maximize everything that could possibly go on the water. Nigeria is sitting at about 1.45. We don't see that changing too much. Angola has had some deferrals, so that's why when you look at some drop, you're seeing some of that kick over. And then Libya, as we said before, there's that force majeure in the first segment. We talked about it. That's dropped some of the production by about 400 to 500,000 barrels. So far, and right now there's 2 force majeures at the port. The longer that remains, obviously those will go down, and that'll slip out into May. So not too much to report in terms of that at the moment, but Ural crude loadings are set at 22 cargoes from April 30th to May 10th, which is right around where we've seen already. Ural's loading will be for Primorsk will be 13 cargoes compared with 14 cargoes a month ago. Again, still remaining elevated. Loadings of Urals from Black Sea have been delayed over the past few weeks due to bad weather, and as we know, there was a storm during one of the attacks. So again, that's something that should start to abate and help bring some of those cargoes through. And then when you look at so far, no Siberian Light, but India is doubling down on Russian crude oil purchases, snapping up every major grade from Ukraine from Russia, even though Ukraine, there's pressure on them to not do anything. For the 3rd month, India has bought millions of barrels of crude, along with ESPO cargoes currently making its way to Sikka in the country's west. Again, it's rare for the nation's refiners to take that crude, but given pricing, it just makes a lot of sense. Now, when you look at Europe, Unipec offered Fortes dated Brent minus 30 cents, and that compares with Tuesday's offer of parity. Trafi offered Fortes at minus 70 cents, and that comes down to where it was previously, which again, you're seeing some of these discounts. Petronas offered Fortes at plus 70 cents, and it compares with the previous offer of plus $1.05. So again, you're seeing just some of the pressure points as they're trying to move some of those cargoes in the European theater. So now when you look at where things are in Europe, again, you're seeing some of that increase in floating storage. So you fell back a bit in terms of what is onshore. We do expect that to close the gap. We don't expect it to really close the gap back to, let's call it 2021 levels, which is the green line, but again, just stay fairly flat and just go, just kind of sideways with increases, decreases, but really not making new 2022 highs. So when you look at what is happening in the refined product storage, gasoline, another build of 67. Then when you look at gas oil, a drop of 17. And that's why, again, they need India. They need that East Suez moving into West to Suez, which is another reason why PADD 3 is going to continue to export into Europe, just because there is such a healthy market. And then when you look at fuel oil, increase of 83. So again, your gasoline continues to be the problem as gas oil remains in a very bullish backdrop. Gasoline, no matter what year, what month, or I should say what year you're talking about, we're at a all-time high. We're above the levels we saw in 2021, in 2018, and obviously above where we were in 2020. And this is why we do expect to see an increase in exports, because they're going to want to try to manage this, because we don't see demand being all that strong. Lagarde essentially said that they have no choice but to keep printing. A lot of pressure there, which is also keeping demand just, she also said that they're already in a recession. For those that also watch the Econ show, we've been saying the same thing. So again, that's going to keep that gasoline a bit muted. Fuel oil starting to move back up. We expect this to just stay fairly stable, a little bit of an increase, just because we are seeing that demand softness. One of the things that was a bit of a surprise was the huge drop in gasoline in Singapore. So one of the things that we were expecting was to see a little bit of an increase in middle distillate, a little bit of an increase in light distillate, some of that drop in resid. Instead, we got a big drop in light distillate by almost 1.5 million, and then a small increase of 600,000 in middle. Again, this is something where the light distillate was some of that delayed pull through as guys come out of lockdown. We do expect that to, on the light distillate side, to come back to 12 million. But you're seeing here that on the total number, you're in a fairly bullish backdrop, which is why Singapore margins have opened up so much, and why we're going to see that accelerating move as India looks to export. Their exports are going to come back up. We expect China to continue to export, especially as the lockdowns persist, keeping some of that elevated. Looking at light distillate, we were staying at near all-time highs. Now we are well below where we were, well through the average, and actually where we were closer to 2010 levels. So Again, we do expect this to go back up, but this was kind of that delayed move as we have some of that reopening. We just expected to come back to the average and then slowly come back up. But again, this was a positive move, which also supported the Singapore refiners in that region. Middle distillate, small increase, but you can see it just brings us to the low end of where we've been versus 2007, 2008. Still a very bullish backdrop. Again, nothing is changing. There's still demand there, which is, again, why we're seeing that margin. So as these refiners continue to target middle distillate, you'll naturally create gasoline, which is why that light distillate is going to continue to grind higher. But again, the middle distillate pricing still remains robust. As resid and heavy disti has come back down, we do expect this to flatline and really kind of hold where the average is at this point. On the Fujairah front, when you look at total products fell by 54,000 barrels. Light distillate posted a sizable draw. Again, that's something that is kind of that backup, that backlog, which will start to reverse, but still remain in a good backdrop. Light distillate fell 988,000 barrels. The East of Suez gasoline market was finding some support as South Korea comes out of lockdowns, which is going to decrease their exports. And again, you're starting to see the gasoline demand expected to strengthen leading up to the end of Ramadan. So you're seeing, again, some of that pull through. There's typically an increase as the Ramadan festivities, there's the festivities as it comes to an end. So again, that's going to keep some of that. And then as that comes through and ebbs, we expect the gasoline market or the light distillate market to see some builds. Middle distillate fell by 14,000 barrels. The gas oil market, again, still upward momentum, still in backwardation, and we're still seeing some of those demand levels. Now, heavy resid rose by 948,000 barrels. Stocks hit their highest level since June 21st of last year. Spot trading activity at bunkering hubs still was fairly strong, but a drop in outright pricing led by a weakening crude, led buyers. So again, you'll see heavy resid come down a bit, and we do expect to see middle and light distillate start to build as heavy resid and distillate comes down. Time spreads weakened when you look at what happened with Brent. It came into about 40 cents, which was fairly normal versus 2021. And this will help move some of these cargoes a bit, but you're also seeing they also, again, cut pricing to try to incentivize some of these additional movements. India refined product demand for April so far softened a bit. Diesel dropped 15.6% versus month over month. Gasoline dropped 9.7%. Change from 2019, again, still in a good position when you look at 2019. But our biggest concern is as you look forward, we expect things to soften a bit as demand weakens given inflation. It's still going to be good in historics wise, but again, as that pricing comes through, as that pressure and struggle, that's where we see some of that downward momentum on a month over month basis. And that'll put a little bit more product into the international market because their refiners are still running strong given where the international market sits. China's supertanker crude imports, you can see that these are tankers flagging, seasonally adjusted all-time high, and actually the highest it's been for all of 2021. And we expect that to persist as they're obviously taking advantage of the cheaper Russian cargoes, keeping that through. But even though they're buying, when you look at independent refiners, you can see that they continue to operate at a seasonally adjusted all-time low, which again is just going to put more crude in floating storage, keep things elevated on the coast. And now gasoline output increased in March, so did diesel. So you had these big increases, and then you immediately went into a lockdown, which is why as things start to normalize, we don't expect, again, Chinese economic data has been a big struggle. We don't see that improving. So as refiners try to increase runs, take advantage of some of that crude, they're going to have to dump this product into the market, and we will see some of those exports increase. Asian floating storage, comps were getting a bit easier. We expect it to remain, actually start to move higher. It's just going to be a matter of when that crude, as we showed with the supertanker, goes from transit into storage. So we do think that this is going to be above 2021 levels, obviously fall short of 2020, but still remain near those highs. North Sea starting to increase again. This is that timing delay between onshore, offshore, and another reason why we're seeing some of the discounts come through against dated Brent. West Africa came down a bit as we saw a bit more imports into the U.S., but still seasonally adjusted all-time highs no matter what year you look at. And this is a key reason why we're not seeing the West African nations increase production, because their biggest buyer, as we highlighted last week, Asia, is just not there. Asia's aggressively buying very discounted barrels from Russia, Iran, Venezuela, leaving these cargoes in the market. Middle East, as we said before, just given where pricing is and those OSPs, we're seeing floating storage increase. We expect this to continue to go up. And if this continues to rise, which we think is likely, we do expect to see OSPs get a bit softer going forward as they look to try to balance this and again, trying to manage some of their flows. Europe back to, when seasonally speaking, back to the average. And this comes back to, again, that disconnect between onshore, offshore. So we do expect this to come down a bit and then increase in onshore storage. So that's what we have for you on the international front. You're seeing some of these different movements. Some of the differentials are getting a bit softer just because they're trying to move some of these cargoes. A lot of crude still on the water, still trying to compete for a home. And that's, again, when you look at the physical market, and then they're going to get more demand coming from Singapore as these runs are supported. So a lot of things happening out there. If you have any questions, you can find us in the comments section or on Twitter. Always happy to answer any or get any comments, answer any questions you may have. So thanks again for watching. I'm Mark Rossano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network.